Hello, hi all Instagram viewers, how are you? How are you doing today? As usual, Friday afternoon, we go live. And just like every Friday, I'm gonna let you ask me questions, whatever you think, whatever question you have that has to do trading related questions. I'm here to answer. Looking forward for your questions. Welcome David, Raj, good to see you here. Omar. How was your trading day? Hi Moshe. Hi, good to see you. Hope you guys had a good trading day. I finished my week in green territory, although started it very red. I don't know if you followed my trade or have been with me in my trading room in the past week. I started my day with terrible $8,000 loser. Lucky enough, yesterday I won over 10 grand, so somehow, although I did not think it was possible, finished my day in green, finished my week in green. And I did not trade today. I had a few meetings, so hope you had a good day. So yes, I'm looking for your questions, looking forward for your questions, and by the end of this session, just like we do every time, I'm going to give you a chance to win a $250 Tradenet voucher, which you can use for every product Tradenet sells, education of course, and then trading room and so on. And that voucher you can win if you will give me a right answer for questions that I have already prepared. So I'm looking forward to the end of this session to ask you these questions, so stay with me and try and win a $250 voucher. Just one request there. If you already won a voucher in the past, you can't win it again. So, again, thank you for joining, and I'm here to answer your questions. So let me know if you have any question that you want me to answer. I didn't see any till now. Anything that has to do with trading, yeah, I don't see any question. So, are there any trading podcasts that I recommend? I tell you what, I'm just not following any, so I can't, personally, I can't just give you something. I just don't have the answer for that, sorry. But you know, there's so many things you can watch on YouTube, for example, that is very educational. I did not trade today, Raj. As I mentioned earlier, I had a few meetings today. Missed my trading day. Happens every once in a while. Traded for the rest 4 days. I finished green in 3 days, but Monday, as I mentioned earlier, was terrible. However, did finish my week up approximately $4,000 or so, so turned out to be good. Yeah, we do have a question here. How do you decide if technical and fundamentals are opposing? Good point. Well, tell you what, in my opinion, fundamentals really are a good and important part of trading. When I started out many years ago, I'm trading for almost 20 years now, I was, as I would call it back then, I was 100% technical, 0% fundamental, which proved to be wrong. You have to combine both. You can't just be 100% purely technical. Market just doesn't work this way. So in my opinion right now, I'm probably around 20% fundamental, 80% technical. And that means that I'm definitely giving the most important part for me is the technical part, and then only then comes the fundamental, although the fundamental helps me every once in a while find a good stock. and find a good trade. So fundamental is important, but technical, in my opinion, is over. Takes over. So if I would find the technical and fundamental opposing, I would definitely go with the technical. However, I may reduce my size. For example, if I want to go long a stock that had bad news, but it looks amazingly good, for some reason it's moving up, and then it comes with a very nice technical formation for a long, and I know there's an issue with the fundamentals, I would still be interested in going long, although there's an issue with the fundamental, but I may reduce my size. For example, if I was planning 400 shares long, my size are a bit higher than that, but doesn't matter. If I was planning 400 shares long, why wouldn't, I mean, a good idea would be to reduce this maybe to 300, maybe to 200. And that is, of course, if you think that the fundamental has any issue that may stop your stock from breaking out, going higher. So I think fundamentals are very important, but I wouldn't give them the same weight as technicals. Technicals, in my opinion, are much more important. You know, you never know based on fundamental what's going to happen. If you could have known based on fundamental what would have happened, I mean, everybody would definitely get rich. Why doesn't everybody, you know, live downtown Manhattan and drive a Rolls Royce? The reason is because fundamentals are not really what counts in the market. It's the beginning, but what really counts is the technical. I mean, if you just need to read, the only thing you need to do is just read the headlines or get into the fundamentals of company, and the result would be just like the fundamentals. I mean, everybody would get rich very easy. It just doesn't work this way. Okay, hope I answered your question. Shabbat Shalom, Ilan. You need a middle package? I think you'll be surprised. Very interesting things are coming soon. I mean, when I say soon, probably in a few weeks. Your ambition is to become a doctor. You can become a technical analyst doctor, you know. Opinion on Facebook. I have been watching it yesterday. Let me take a quick look. Okay, Facebook spiked 2 days ago. We traded it, I think, once or twice in the past few days. So Facebook's really spiked recently, and it came up much higher. And in my opinion, the only thing it does now is just profit taking. In my opinion, it's going to stop probably in another day or two, coming down. This could be right now the recent low, and probably going to spike over the highs. In my opinion, it's going to continue higher, but that's technically speaking, right? And when I speak about the technicals, in my opinion, again, Facebook is going to continue higher, but you need to get a proof of that. So if Facebook starts moving higher, you could go for a reversal and go long, or you can take it long over yesterday's highs, because that would be a short squeeze. I don't trade small caps, David. The reason I don't trade small caps is because they're not being traded by institutional traders. You know, everything I do, every stock I trade is over $10 and over 1 million shares a day. And the reason I trade only these stocks is because 80% of the volume in these stocks come from institutional traders. You want institutional traders to trade your stocks. That gives the stocks that you're trading, you can depend on them. It gives them credibility. You cannot trust a small cap. The reason you cannot trust a small cap is because 80% of the traders in a small cap are just regular folks like us. I mean, some professional, some non-professional, but you can't trust us. You can't trust a retail trader because the price could go anywhere. I mean, you can't really trust our decisions. You can trust institutional traders. Institutional traders are working according to rules, very specific rules. And if you know these rules, and you know that 80% of the volume comes from institutional traders, you can trade a stock. And that cannot be a small cap. It has to be over $10, and it has to have more than 1 million shares a day. Otherwise, institutional traders just won't trade it. So I'm actually not following. I can't help you with your question. I'm not following small caps. Any trading book? Did you try mine? It's called The Market Whisperer. I tell you what the problem I have with trading books. I don't want to sound bad here, but I want to tell you something that, in my opinion, is a difficult thing with trading books. Let me tell you this. I did not read a new trading book in the past few years. I don't need them anymore, of course. Maybe I should. But in the past few weeks, for years, I didn't read any. So if there's something that came out in the last 2 or 3 years that I don't know, then sorry, I just don't know. The reason I wrote my book, and again, it's called The Market Whisperer, the reason I wrote it was mainly because I read many books. And when I started out 20 years ago as a trader, I read a few books. The people who wrote it were my heroes. And it sounded like amazing books with a lot of education, a lot of things that I should copy, understand, follow. The problem started when I was an experienced trader. Like when I was regularly making money and a lot of money, maybe 6 or 7 years after I started trading, then at that point I went back and started reading the same books again. And the people who were my hero were no longer my heroes, and let me tell you why. When you're an experienced trader, when you know really what's working out and what's failing, it takes one sentence to read in a book. Just one sentence. I mean, something the author said about ABC, doesn't matter. Something he said. And as an experienced trader, you take a look at that and you say, wow, this guy can't be making money. It's impossible. This specific point he just mentioned is really a tell. It's something impossible. He couldn't have written this from a perspective of a person who regularly makes money in the market. So I'm sorry to say, I'm sad to report, every book I ever read was written by people who may be good educators, but are not regularly making money in the market. And I don't want to get into names. I will not get into names, but it's very sad. I did learn a lot from these books. It doesn't mean that if you read a book by a trader who's not making money regularly in the market, it doesn't mean you can't learn. You definitely can learn. It's not necessary that a good educator will be a profitable trader. Really, it's not necessary. You can have fantastic teachers who just can't make it in trading. Does every person who teaches in the university about business or whatever sold a company for $1 million? Absolutely not. Probably they failed, but they still are good educators. So I cannot recommend a book or those books that I read, which were written by traders who, in my opinion, and I'm quite sure about that, losing money in the market. So maybe something came out. If you guys want to share other books, go ahead. I'm not going to help you with that, sorry. Okay, I'm looking for more questions here. True, I prefer shorting a stock, Hussein. I prefer shorting stocks. The reason I prefer shorting stocks is because stocks are coming down approximately 80% faster than stocks that are moving up. So if you have a breakout or if you have a breakdown, the stock on a breakdown would move 80% on average. Well, it's anywhere between 60 to 80% faster than it would move higher. So shorts works better than longs because fear works better than greed. So fear is much more stronger than greed. Therefore, I find myself clicking a button and in no time taking my partial, having fun, putting some money in my pocket. It will be a little bit more difficult going long. And there's one more important reason. The money lies, and here's an important thing you guys need to know, and it has nothing to do with trading, it has to do with everything in your life. There's money where most people don't know how to make it. The money lies where most people don't know how to make it. And most people don't know how to short. Everybody knows how to buy a stock. It's rather easy. You click the buy, you sell. Actually, short is not complicated. But 99% of the people don't know how to do it. I mean, maybe 50% of the people you'll ask will say, yeah, I know what short is about, but they don't really know how to click the buttons and how to short a stock. You have an advantage if you're a short seller because not a lot of people know how to do that. It may sound strange to you if you're a trader because shorting is a part of your life. But seriously, go around, ask people. Ask the people who are trading right now, who are investing money in the market. And they're the majority. We are not the majority. You know, I mentioned earlier that 80% of the volume from the stocks that I'm trading, and the stocks that I'm trading comes from institutional traders. 80% of the volume. So who's the 20%? Traders? Forget about it. We're just a very small percentage of the 20% that remain after the institutional traders did their job. So we're just a small part of the 20%. I don't know if we're even 1% of the 20%. I don't think so. I don't know the number. But we're just a small part. So let's say we're 1% of the 20%. What about the 99% of these guys? They're investors. They're like Warren Buffett. They don't really know how to short. Did Warren Buffett ever short a stock? Does he have anything in his portfolio that is short? I'm not saying Warren Buffett doesn't understand about shorting. I just don't think he does. To the best of my knowledge, maybe he does, really, I don't know. But most investors, do they short anything? No, they don't. You have an advantage. You have an advantage when you're shorting a stock. Because most people don't know how to short a stock. Should new traders have a daily stop limit? Of course. Of course you should. And it's different from every trader from one trader to another, but you gotta have a plan. When you start trading, you gotta have a plan. You need to have a plan for the day, for the week, for the month, and a big part of it is having a daily stop limit. Absolutely. I'll tell you, for example, one of my important rules. Doesn't only deal with how much money I may lose per day, which I have this rule. I'm a little bit flexible here. It's anywhere between $4,000 to $6,000, okay? That would be my limit. And you know what? Forget about my numbers. Traders that I know should trade probably 10% of the quantity I'm trading. I mean, especially if you're new. So you probably should have your limit anywhere between $300 to $400, something like that. That is if you have some experience. If you're just starting out, novice trader, first few months, maybe $100, maybe $50, I don't know. But you should have your stop limit. But I have different kind of stops too, which are not less important. I'll give you an example. If I have 3 losing trades in a row, start my morning with 3 losing trades in a row. I can't remember the last time I had it many months ago. It just rarely happens. But when it does, when I have 3 losing trades in a row, I quit trading. I quit trading for the day. And why is that? Even if I did not reach my stop limit, And why is that? It's not because how much money I lost, it's because I'm a loser today. And I feel like a loser. And whatever I'll do this day, I'll keep feeling like I want to win back my loss, and I can probably bounce and get a winner. I'll try very hard to have a winner, and that is usually just something that drives to more losses. I'm not mentally capable of continuing to trade when I have 3 consecutive losses. I just can't. Even though, if you will ask me at the point where I have 3 consecutive losses, if you'll ask me right at that point whether I can continue trading or not, whether I'm mentally capable or not, I will definitely tell you, yes, I am. So, okay, sorry, I just had 3 losses, but I can continue. I'm sure I can continue. And why am I thinking that way? Which is biased, of course. It's because I want to get back to green. I want to fight to get back to green, which usually would bring me to probably can bring you one of your or mine most terrible trading losses. This is how, a big loss becomes a major loss, something that can, make you lose your account or something like that. So you gotta have more type of stop loss. Why do you have hard stops? If you can elaborate, please. I don't have hard stops. I generally don't use a hard stop. For example, yesterday I used plenty hard stops. Why? Because I was involved in a few trades at the same time, and when I have a few trades at the same time, I have to use hard stops. But normally you shouldn't be using hard stops. Hard stops will take you, stocks that, for example, quickly spike down or quickly spike up, depending on what side you are, can take you out of the trade, and easily. You have to wait to some sort of a reversal. For example, if you're longing a stock and it comes down, you have to wait for some sort of reversal. If you determined your stop to be at a very specific place, at a very specific price, who cares about your price? Who cares about your price? You're the only one who cares about your price. The market doesn't care about your price. The stock doesn't care about your price. Institutional traders don't care about your price. Take a good look, find a small reversal, move out on technical stops rather than, hard stops. But again, this is something that I would recommend to traders who have some experience. If you're just starting out, please start with stops, because if you do start with stops, it will help you become a better trader at the beginning. Again, mentally help you. And at the beginning, mental help is more important than technicals. Why should you scale up your share size? You don't always have to scale up your share size. Sometimes you should, sometimes you shouldn't. Not all trades are created equally. Some trades you believe in. For example, I don't know if you've seen yesterday my trade, the one I added twice. I was short XLNX and I was adding as it came down. That turned out to be my best trade for the past few years. I gained almost $15,000 yesterday. It's on YouTube. You can take a look at the video. I gained $15,000 traders from trading yesterday XLNX, and I continued adding to a short sell. So that was a trade that was, in my opinion, not the same like my average trade. So when you have a trade, and it's hard to say what is your average trade, but when you have a trade that you trust more, that you believe that can lead you to further gains and it's looking better than the usual, you definitely can and should add to that trade. So yes, you should scale. I'm going to answer the last question now. Sorry, you probably have more. And then I'm going to give you a chance to win a $250 voucher from Tradenet with a question which I'm just about to ask. What do you think about the short sale restriction? How do you trade when it's on? What short sale restriction? I'm personally trading CFDs, contracts for difference. I'm not in the US, so there's almost no restrictions when I'm trading CFDs. I can short IPOs on the day of the IPO. So I'm personally don't have any issue with that, but restrictions, when the stock is restricted, and it may happen on CFD too, nothing to do there. I mean, just don't trade it. How am I not break down mentally after this huge loss on Monday? I'll finish with that answer, with that question, okay? You know, in your trading career, you need to differentiate between two different lives. You have two different lives. One life is the life of a trader. The other is the life of a normal person. As a normal person, I walk out from my home down the street and I lose $100 for some reason. It fell out of my pocket. I'm very angry. If my iPhone breaks down on the ground and I need to buy a new one, I'm very angry. It ruins my day. And I'll go and I'll buy another one. And it just sucks, you know. I just lost my iPhone and I hate losing my iPhone. And a new one would cost me, I don't know, 600, 700 euros, whatever. So how did it fall out of my hand? I mean, why did I do that? That's my normal life. On my trader's life, and you need to have a Chinese wall in between them. On my trader's life, I can lose a few $1,000s in a minute, and I will not be angry at myself as I am as if my iPhone fell down. You see, that is something you can only acquire after several years of trading. Because in the first few years of trading, you mix your trader's life with your normal life. And then you make $1,000 and you go out to your wife or husband next door and say, oh my God, I'm gonna be rich. I mean, look at how much money I made in the last 30 minutes or so. I mean, look, this is amazing. You're proud. Or if you lose $1,000, you're probably not going to tell. But it ruined your day, right? I mean, how long does it take you to make $1,000? You're gonna work a week for that, having a normal job, or more than a week, depending on where you are in the world. I mean, sometimes 2 months. So you see, the thing is, your normal life has nothing to do with your trader's life. In your trader's life, you can make a few thousands a few minutes. You can lose a few thousands a few minutes. So I came to that point. I am in that point. I'm not very proud when I make thousands of dollars, and I don't break down after losing a few thousands of dollars. I just don't. I mean, does it affect me? Of course it does. Of course it does. But you know, up to the door to the next room. And then I, move forward and forget about what happened. Doesn't matter if I was a winner or a loser, and gladly I make more money than I lose. Okay, here comes a question, traders. You may have waited for this question, and I'm sorry I didn't answer your questions here. I see there are several more. Please keep them to next week. Oh goodness, I missed a lot of questions here. It would have taken me like a week now to answer everything. Oh, there's so many. Usually you're not that active. You were today. I'm sorry. There have been plenty of questions here. I'll try and answer next time. So next time, please write them down, and be sure you're the first to write down the questions, okay? And I'll try and answer. So here goes my question, and I need a full answer. So don't give me a partial answer to my question. Think about it for a short while. Write it down. Find the time. I'm here with you. Just type the answer. Yeah, type the answer here as here on Instagram. So my question is, and hear me out. My question is, what does, and it's the first part of my question, so hear all of my question, just the first part. Don't answer my first part, because that would not be a full answer. What are the initials? I mean, what does, VWAP stands for? VWAP. VWAP. What does it stand for? What does it stand for? What's first word is, I'll give you a clue, volume. What are the rest? And who is it created for? Who is it created for and why? It was created for a very special reason. And I want to know the reason for who and what's the reason. So, VWAP is, write down, and what was it created for? I'll go back to the first question, and of course the first person to answer is going to win, assuming he did not win before. So yes, the answer is volume, weight, average price. That is correct, but as I mentioned earlier, that's not the full question. So yes, VWAP stands for volume, weight, average price. That's the first part of the question, but I need the second part, and it has to be written together. I can't find two different remarks with the right answer. So if you just answered one, it's not going to be enough. Volume, weight, average price is the right answer, even if you did not spell it correctly. I see some guys here who are whose English is obviously not their first language, like mine, did not spell it correctly. I'm not sure I would have spelled it correctly. So volume, weight, average price is the right answer. Why? And I want the second question to be answered. For whom was it created for and why? So far I don't see any. Yeah, I see some answers. They're just not right so far. No. I see an answer, but I don't see the why it was created for those who you mentioned. I'm not going to say the name. I don't see the why. So I've got an answer here which is a little bit more elaborated, but I don't see the why it was created for them, because you answered correctly for who it was created, but you didn't answer why it was created for them. No. I've got one here which I may consider as right. Okay. I'm going to call the winner. So my winner is, I don't know, I'm just going to say the letters here that starts with Dan and then goes EGQ005. You're my winner. Although, we mentioned the volume, weight, average price, so you did not mention that in your answer, but you've got the right answer without that, so I'll call you a winner. I think you know volume. Yeah, you actually wrote down volume, weight, average price. Sorry, you did. So the answer is for, and again, if Tradenet support is with me, please write down DAN, then EGQ005. Please contact our guys there and send them your details, and you'll get a $250 Tradenet voucher. And thank you very much for participating. Let me tell you guys what is it made for. And I'm not reading the rest of your answers because probably some more of you guys mentioned the right answer, but as I mentioned earlier, the first one is the winner. So volume, weight, average price, so that you know, was invented for institutional traders originally. It was invented during the 1970s, and I think it was 1976 where it came out, and it was made for institutional traders in order for them to know whether they bought the price higher or lower than market price. What is higher or lower than market price? Well, you can take a stock and calculate its average price, but average price wouldn't be right. Why? Because a stock could come 20 cents down with 200 shares volume, or it could go up 10 cents with 10,000 share volume. So it's not only about the average price of the stock to calculate the correct average price of the stock. It has to do with the volume too. So you put in the volume with the price, and then by multiplying the volume with the price and then by dividing, of course, you come to the point, you come to the VWAP line. And the VWAP line is the average based on volume. And why is that important? Because it was created in order to compensate the institutional traders whether they bought or sold at a good price. For example, if the stock price is below the VWAP and they bought at a price which is very far from the VWAP, it's extra commission for them. If they bought the price at the VWAP, no extra commission for them. If they bought the price, the stock at a price that is over the VWAP, they're probably going to get fired. So it was invented in a way that it was automatically calculating their bonuses, their commission really, including the bonuses. Meaning, when an institutional trader nowadays clicks the button and buys a stock for his customer, let's say a big fund came to Goldman Sachs and said, please buy us 1 million shares of Apple. So Goldman Sachs, the trader, would sit down in front of his computer and start buying. Of course, he won't be clicking one button and buy 1 million shares, because otherwise the price will spike up. So he'll start buying slowly in order not to drive the price up. He wants to buy low. So whenever he clicks the button, buys 1,000 shares, the computer calculates the second he clicked the button, the price he paid, the VWAP price at the point where he clicked the button, the difference between the VWAP and the price of the share at that point, and therefore his bonuses. So at the end result is he bought 200,000 shares at that day, at an average price VWAP which is lower than the average price, than the average VWAP, therefore than the price of the stock. Then his bonuses come from that and everything. So it was really a system to calculate whether the institutional traders are paying a good price for the stock, and in order to compensate them. So that was the answer. So thank you very much. Thank you very much for participating, and I hope you learned something from our session today. I hope you enjoyed, and I look forward to see you next week, same time. We're going to do the same, and again, I'm very sorry I couldn't answer all of your questions. So again, thanks a lot, and welcome, and I'll see you next week. Bye guys.